Hey everybody, and welcome to another video from the Keystone Financial Academy. So today I wanted to take a break from the instructional videos and do something different. I wanted to talk about a handful of influential people that shaped the way modern investing is today. They are rightfully called legends of the investing world who had a tremendous influence on modern day Wall Street and finance in general. Some of these people you may have heard of, some maybe not. Most of them are no longer with us, but some are very much alive and still either consulting or trading in the market. All have left or continue to leave a lasting legacy on the investing world. So without further ado, cue the music and let's get right to it. If you want to start from the very beginning, you really have to go back to Charles Henry Dow. It's difficult to imagine modern-day stock market without Dow. His many contributions include the founding of the Wall Street Journal, the invention of the Dow Jones Industrial Average, and the formulation of Dow Theory, which is not only the basis for technical analysis, but also the framework for analyzing and understanding the market in general. Dow was born in Sterling, Connecticut, to a family of modest means in 1851. He had little formal education and was mostly self-taught. He started his career as a reporter and writer for a handful of New England newspapers, and he learned a great deal of finance and business by regularly interviewing and writing about tycoons and investors of his day. In 1880, he relocated to New York City to continue his financial reporting and be closer to Wall Street. With a reputation for honesty and refusing to accept bribes or stock for positive stories, which happened a lot back then, he was pretty much an incorruptible straight arrow. In 1882, he formed the financial news bureau Dow Jones and Company with his business partner Edward Jones, another very well-known investor, and launched the Wall Street Journal in 1889 with the motto, "The truth in all its proper use." In 1896, seeing a need for a stock market activity tracker, he came up with the Dow Jones Industrial Average. It was also around that time that he came up with Dow Theory, used a lot in technical analysis, but the theory wasn't popularized until after his death. Dow died from a heart attack at the age of 51 in 1902. A legend on Wall Street, he was first and foremost a reporter, but his lasting legacy transformed the financial and investing world. And so much of what you see around you in modern day Wall Street can be traced back to Dow. The next legend to talk about is without a doubt Benjamin Graham, who's known as the father of value investing and security analysis. He was also a very influential educator and teacher who shaped a generation of investors with his books Security Analysis from 1934 and The Intelligent Investor from 1949, a copy of which I happen to have on my shelf right behind me. His list of students reads like a who's who of modern investing, and I'm going to mention two of them later, including John Templeton and Warren Buffett. Graham was born in London in 1894, but his family moved to the US shortly after, and he grew up in New York City, attending Columbia University, and when he graduated, he went to work on Wall Street. He was one of the first shareholder activists, which is when you use your shareholder position to influence company management or board of directors. As an investor, his returns averaged about 20% from 1936 to 1956, which is certainly impressive, and his philosophy of evaluating a company's fundamentals and buying only undervalued stocks, in other words, value investing, was tremendously influential. Graham died in 1976, leaving behind a legacy that is still felt today. From the father of value investing, we now go to the father of growth investing, T. Rowe Price. You may have heard of the advertising slogan,
T. Rowe Price. Invest with confidence.
But few people know the man behind the company. Thomas Rowe Price was born near Baltimore, Maryland in 1898 and attended Swarthmore College, receiving a degree in chemistry in 1919. He started his career with DuPont, but then quickly realized that finances and money management interested him a lot more than chemistry did. He then switched fields and went into finance and worked at several different brokerages over the course of a decade, but his growth-oriented philosophy conflicted with the more conservative approach of all these brokerages, so he set out to form his own firm, named after him, T. Rowe Price, in 1937, and managed them until 1966, retiring completely in 1971. T. Rowe Price's time managing his own fund was marked by superior investor returns and the philosophy of investing only in well-managed companies, doing business in promising fields, making him one of the original growth investors. Price was also among the first to not charge a commission, but rather a percentage of the assets under his management, and he essentially invented the way all mutual funds and hedge funds would operate from then on forth. Price died in 1983, and his company T. Rowe Price and Associates went public in 1986 and was added added to the S&P 500 in 1999. Okay, the next legend on this list was once described by Money Magazine as arguably one of the greatest global stock pickers of the 20th century. Sir John Templeton may sound familiar to you if you ran across the Franklin Templeton funds while researching what to invest in. John Templeton was a mutual fund pioneer and one of the first and most successful contrarian investors, who are folks that invest against common sentiment and market direction. Templeton was born in Winchester, Tennessee in 1912 and was educated at Yale and at Oxford. He became one of the first chartered financial analysts, or CFAs, when that charter was established, and went on to form the famous Templeton Growth Fund in 1954. He was one of the first to invest in post-war Japan, correctly predicting it'd be a global powerhouse eventually. In 2005, he also predicted a market collapse within the next 5 years, which proved to be true as the market collapsed in 2008, which also happened to be the year that Templeton died at age 95. Templeton lived most of his life in the Bahamas, and despite his wealth was known to be a very frugal spender. He was also very generous, having given away over $1 billion to various charities before he died. Okay, next up is an investor I've mentioned once before in the video on index funds. Known as the father of the index fund, John Bogle was the retired CEO and founder of the Vanguard Group, the world's largest mutual fund investment company with over $3 trillion under management. After forming Vanguard, Bogle established the very first index fund available to the retail investor and remained a big proponent of low-cost investing, mainly through index funds or index ETFs, for his entire career. You've probably heard a lot about the advantages of investing in index funds, and John Bogle was the visionary that got the ball rolling over 50 years ago. Born in New Jersey during the Great Depression, Bogle attended Princeton and graduated in 1951 with a degree in finance, and he worked at Wellington Fund for some time before splitting off and forming Vanguard in 1975. His investing philosophy has always been defined by simplicity and common sense, and avoiding speculation by investing with a long time horizon. Up until his recent death in 2019, Bogle remained a legendary and widely respected investor and was the recipient of numerous investing and lifetime achievement awards. So if going by numbers alone, Peter Lynch is the top fund manager of all time. The father of GARP investing, which stands for growth at a reasonable price, he took over Fidelity's little-known Magellan Fund at age 33 in 1977 when it only had $20 million in assets. Just 13 years later, in 1990, as Lynch retired from active investing at age 46, the Magellan Fund stood at $14 billion and averaged an astounding 30% return for every year that Lynch was in charge. That was more than twice the return of the S&P 500 in that time frame, and no fund manager before or since has been able to duplicate these kinds of results for such a consistent amount of time. Lynch was born in 1944 in Newton, Massachusetts, and educated at Boston College and the Wharton School of Business at UPenn. After serving 2 years in the Army, he was hired by Fidelity in 1969 and stayed there for an entire career, becoming the Director of Research in 1974 and the head of the Magellan Fund in 1977. After his retirement in 1990, Lynch continued as a Fidelity consultant, public speaker, and best-selling author on investing. His investing talks are well worth seeking out and watching on YouTube. Finally, we come to probably the best-known investor to the public at large, and that is, of course, Warren Buffett. Known as the Oracle of Omaha, Warren Buffett is among the most successful value investors of all time. Berkshire Hathaway, a multinational conglomerate holding company with assets in excess of $700 billion. Buffett himself is currently the fourth richest person in the world with about $67 billion in personal wealth. Born and raised in Omaha, Nebraska, where he still resides, Buffett was educated at University of Nebraska and then Columbia University in New York City. He's a devoted follower of Benjamin Graham, who I mentioned earlier, and briefly worked for him in the beginning of his career. A gifted investor, Buffett built up numerous investments and partnerships in the 50s and 60s before acquiring Berkshire Hathaway in 1964. The company maintains extensive, sometimes 100% holdings in companies like Coca-Cola, Geico, Kraft Heinz, American Express, Duracell, and countless others. So to finish up, there are a couple of investors I won't go into a lot more details on, but they're certainly worth an honorable mention. One of them is value and contrarian investor John Neff, who ran Vanguard's Windsor Fund, which was the largest such fund in existence in the 1980s. Another is George Soros. While today he attracts far more attention in the political world, as an investor he created and ran the Quantum Fund from 1973 onward, which was one of the most successful hedge funds in history. And finally, we have Bill Gross, the co-founder of Pacific Investment Management Company, or PIMCO, and who has been described as the nation's most prominent bond investor, or the king of bonds. Alright, that concludes a tour of the legends of Wall Street. As always, be sure to subscribe and hit that like button, and let me know in the comments below what topics you would like to see me cover more of. Thanks for watching, and I'll see you all soon.